Hi guys, welcome back to Investor Prime TV. If you're new, make sure you subscribe and of course follow me on Insta at Investor Prime. Alright, let's get into today's video. Hi guys, so today I'll be looking at NIO. Alright, so basically what's been happening up until this point and what I believe is going to happen later on. The price movement has actually been very interesting. You know, it's been rising up until $54, peaking around $54.25. And then a big, huge bearish move on the 13th of November. So this was most likely caused by the Citron report that came out on NIO. So basically the report in a nutshell was saying that they don't believe that this rally would continue. A lot of short sellers came in, started driving the price down, etc. So the Citron research report was alluding to Tesla undercutting NIO's production. Basically, by Tesla having cheaper cars, this would affect the order flow of NIO cars. So the price pretty much on the open, it opened and gapped high at 54, and then the bears brought it right down. It's been a huge move, basically from 54 down to 40, the low of $40, so that's $14 drop, and then finally closing at $44. So it's still closing $10 below where it opened. So at that point, a lot of investors and people might have been thinking, oh, this is the end of NIO's share rally or stock price rally, which wasn't the case because the next day the bulls took back control. A lot of investors still believe that the earnings announcement is going to be good because the last couple of earnings announcements, quarterly earnings announcements of NIO have been good. So a lot of investors still believe and have faith in NIO outperforming the predicted earnings announcement. So the Citron Research Group also believed that NIO wouldn't beat the predicted earnings announcement today. So first of all, I'm going to pull up a Fibonacci chart because it's been rallying and I want to see effectively where my support areas are going to be. Because if I just zoom out of this chart, I really can't see any immediate supports. And $41, where pretty much the market opened on the 16th of November, seems to be a good support. Okay, so looking at the Fibonacci retracement, just by looking at the tool, I can plot where my support zones are going to be, my three key support zones. All right, so the 38%, the 50%, and the 61%. Okay, so those are my support 1, support 2, support 3. All right, so let's just see what's going on around this support. So with the big bearish move that happened on the 13th of November, okay, the price effectively came down to the 50% support and then it bounced back and closed above the 38%. So what I was looking for to see what was going to happen around the 38, or if the price was going to come back down to the 50 or even go down to 61%. I wanted to know what the next open, i.e. the next session of the 16th of November was going to tell me. And by the looks of things, the market pretty much opened around the 50% and has retraced back over the 38%. So the way the Fib retracement tool works is that I'll be expecting to move back to the 23% or even up to the 0, and test this resistance because this is effectively a resistance point that's been set. I want to see if the price will come back and test that. But for now, if the price stays above the 38, i.e. stays above $43, then I'll be inclined to say that that's a good support, because it was tested on this bearish move on the 13th of November and it closed above it. So the next session on the 16th of November opened below the support but closed above the support, i.e. above the 38% line, which basically shows me that this is a good support. Okay, so I've set my support 1, support 2, and support 3 based on my Fib tool. So I no longer need the Fib tool right now. All right. And by the looks of things, this is pre-market. All right. So the pre-market open is anticipated to be $46.87, which is higher than the close of $45. I would want to wait and see what happens this session, especially leading up to the earnings announcement today. All right, guys, I like to annotate my charts so I let myself know what I'm doing basically when I'm doing my analysis. So that way, when I get involved in actually trading, let's say the market opens, I eliminate emotions as much as possible from trading. Okay, so I can look at the market and just say, okay, well, if it reaches this point, what I'm going to do, if it reaches this point, what I'm going to do, if it reaches this point, etc. You know, so I've already got all these pre-planned. You know, logically, I'm following my strategy. All right. So I like to set annotations. So basically, now that I know what I'm going to do leading up to this earnings announcement today, let's say the earnings announcement was good on NIO. Likely the price is going to drop, you know, because the price usually rises in anticipation of an earnings announcement and then it drops momentarily and then starts rising again. If the earnings announcement was good, then the price is going to start rising again. And vice versa, if the earnings announcement is bad, the price will be falling and then it usually rises. And then if the earnings announcement is bad, then the price will drop and continue falling. Okay, so assuming the earnings announcement is good, which will be good because I've got options contracts out on NIO and I also own stock in NIO. It's in my best interest that the earnings announcement will be good. Assuming it's good, then I'll be expecting the price to get to $54 and I'll be waiting to see what the price does around $54. But assuming the earnings announcement is bad for NIO, then I'll be expecting the price to fall, of course. You know, over time it's going to fall because a lot of people are going to think, oh, well, that's the end of the NIO rally. You know, it's time to get out. You know, it's time to get out. It's time to sell my shares. It's time to close my options contracts, whatever. You know, basically get out of the market, which will see a bearish move. If that's the case and it's bad, then what I'm going to do is I'm effectively going to, you know what, let me pull up a moving average. All right. I really like moving averages, you know, especially the exponential moving average because there's a lot of weight towards the most recent price action. So it's a lot more sensitive than the simple moving average. So I want to see what's happening and act quickly. I want the market to tell me what's going on quickly. If there's going to be a change in the trend direction, I want to know as quickly as possible so I can either get out or hold a little bit longer. So the moving average I'm going to use is 50. So the last 50 periods moving average, or in this case, the last 50 days. I want data from the last 50 days, exponential data. And the reason I'm pulling up the moving average, partly the way moving averages work is the price usually moves away from the moving average and then it reverts to the mean, i.e. it reverts to the moving average. So as you can see here, the price moved away from the moving average, came towards the moving average, and it's just been going. Every wave has been getting closer to the moving average, but this wave has been extreme, you know. So if the earnings announcement is bad, then I'll be expecting the price to revert back to the mean, so revert back to the moving average, and then from there I'll see what I'm going to do. All right, guys, so to summarize, basically I'm looking for one of two things. All right, so I'm looking for the earnings announcement to be positive, i.e. NIO beat the predicted earnings value. In that case, I'll be using S1 as a good support. You know, I'll expect the price to go bounce between the resistance and the support, you know, and eventually maybe even get towards the resistance and eventually break the resistance and continue rising up to, who knows, maybe even $100 a share. Now that's scenario one. All right. So now scenario two is that the earnings announcement, NIO don't beat the earnings prediction, all right? I.e. the earnings announcement is bad or negative. In that case, I'll still be watching out for S1, all right? If this is still proven to be a good support, then I'll hang on, all right? But if it breaks support 1, okay, then I'll wait to see what happens in support 2. If it breaks support 2, then again, I'll be looking to see what happens to support 3. But assuming it breaks all 3 supports that I've set up, okay, then I'll be waiting to see what the price does around this moving average, my 50-day moving average. All right. You don't necessarily have to use an EMA, exponential moving average. You could use a simple moving average. I just prefer the exponential because I like to know as quickly as possible what the market is doing. If the market is making a turn for the worse, then I want to get out quickly. If the market is making a turn for the better, then I want to either get in or I want to add to my positions if I'm already in. So those are pretty much the only 2 things I'm looking for right now. because there's nothing I can do at the moment but wait and see the outcome of the earnings announcement. So if you enjoyed this video, make sure you like, comment, and subscribe. And if you're new, make sure you subscribe and hit that notification bell so you don't miss any further uploads. And for everyone who's recently subscribed, a big thank you and welcome to the family. All right, thanks a lot, guys. I'll see you in the next video.